Welcome back to Fast Market here on the TD Ameritrade Network. Let's bring in our next guest for our cash tag segment, and that's going to be Andy Swan, the co-founder at LikeFolio. Welcome back to the show, Andy.
Thank you.
All right, so we're talking grocery business. Kroger is really starting to step up a lot of their own brand name as far as the grocery business goes. We've seen consumers trade down. What kind of data are you guys seeing out of LikeFolio in reflection of what the consumer is doing at this point?
Yeah, the consumer is hurting a little bit. I don't think that's a surprise to anyone, especially when it comes to food prices and what you're spending at the grocery store. Although that's started to level off, I think, a little bit. We saw that with the CPI this week. Not that 4% inflation is great, but when you compare it to where we were, significantly better. So I think the sticker shock is starting to wear off, but we're still at pretty high prices, and the consumer is still running out of both savings and credit at this point. And so that means people are pinching pennies. And one way that they do that is by going to those private label brands. When I was younger, we just called them the generic brands, but now they're private label brands. And, Kroger's Simple Truth brand is doing pretty well. We see it outperforming a lot of peers. People tend to like Kroger's almost as much as they like Costco's Kirkland version. So we think Kroger definitely benefiting from both, higher food prices, which just means more money going through the cash register. And if your margins stay the same, that means more profit, but also the move down to private label brands by the consumer also benefiting Kroger in a pretty big way. The only thing that really gives me a lot of concern about Kroger is, when we look at Kroger's consumer happiness levels versus peers, we see it down 6% on a year-over-year basis, which is pretty unusual for a grocery store. Part of that is, some union complaints about the Albertsons Kroger merger, but also a lot of it is those prices at the stores. And we're starting to see some indication that Kroger in some markets may not be as impenetrable as it was 5 years ago. We're seeing Publix start to move in around here. People are very excited about that. There are other stores coming in, including Walmart and Target expanding their offerings that are giving Kroger a little bit of a run for its money. So we think overall the macroeconomic environment's favorable to Kroger, but the competitive environment's really starting to tighten up.
Andy, as usual, LikeFolio has touched on, I think, the data point that's key for Kroger going forward, and that's this private label. What they've done is they've upped the packaging. They've made it more higher quality in terms of the product that they're presenting, and private label brands is now up to a quarter of their sales. And why is that important? Because the margins are bigger. It's 35% versus 26% for the national brands. So the more they sell of these, this goes right to the bottom line. And in terms of their valuation, they're trading a bit below some of their grocery peers. This is a company. Berkshire Hathaway has a 7% stake worth about $2.3 billion. So they're invested in this, but it's this private label brand. I think the expansion and the importance of that is important for their growth over the next couple quarters at least.
Yeah, it's a really huge deal, and they're executing on it pretty well. Unlike some competitors. I think that what these companies figured out, along with going away from, calling it the generic products, they started calling them the private label products, and they actually started investing in the design and packaging of those products and the naming of those products. So rather than just, vanilla ice cream, now it's Simple Truth, home churn vanilla ice cream, and people like that and they're willing to pay for it. And it almost feels like a competitive brand at this point versus just a generic. I think a lot of companies have done a good job of that, and I think Kroger's done a very good job of that, and they're seeing the benefits of it because, like you said, it's a higher margin place to be, and it's where the consumer is naturally going as their wallet starts to get a little lighter.
Yeah, Morgan Stanley came out with a note today about Kraft Heinz, where the consumers, according to their channel checks, consumers are trading down to these lower-priced off brands. And I remember that. We called them generics. You stayed away from them.
Exactly. The white labels, remember, with just the black bars on them?
Yeah, like they were made in a
prison. Who's the genius that said, stop calling them that?
But when you look at this company, Andy, it's been churning between about 42 and 50 over the last probably 10 months or so. What kind of earnings score do you have on this one? And is this all going to be based on, maybe progress with the Albertsons-Kroger merger that the Teamsters are now against?
Yeah, our earnings score is just slightly bearish on this, and it's really just because of where the stock is in that range. I think they're going to come in. They raised expectations last quarter. We think they hit those raised expectations, but the stock's kind of already near top of range, so we think pullback's the most likely move, but it's not something I'm going to bet the farm on. And I do think you're right. I think this call is going to be a lot more about progress with an enormous merger that would give them reach, to 85 million households. Just an enormous deal. It's the biggest thing on their plate. It's what every investor is going to want to know about. I think that's going to dominate the story a little bit more than how much they made last quarter, what their profits look like, and what egg prices are going to be in the next quarter. So this is one of those, news type of earnings events. I think if anything, we get a little bit of a pullback. But that also requires a lot happening with the Fed this afternoon that, quite frankly, I don't want to stand in the way of.
Yeah, definitely some catalysts out there going into this Fed meeting and the earnings tomorrow morning. All right, Andy, great stuff as always. Appreciate it.
All right, thank you.
All right.